Hello, and welcome to the API Chronicles, Unlocking the Future, a live celebration of APIs hosted by Marqeta. My name is Renee Schaffman. I am a product marketer here at Marqeta based in Austin, Texas, and I'll be your moderator for today's live stream. Today, we're talking about card program management. We're going under the hood of modern card program management with a panel of experts. Fresh off the launch of our new card program management guide, this live stream is perfectly timed. We'll cover everything from what program management actually means and why it matters to launching new use cases and scaling globally. Plus, we'll look at how tools like our UX toolkit and built-in risk management capabilities can help you build, grow, and future-proof your program. And as we have the benefit of running this as a live session, we'd love some audience participation. So drop your questions and thoughts in the chats, in the comment section, and I'll do my best to get to them when it is appropriate. So with that, I would love to introduce our panelists today. Welcome. Let's please have you introduce yourselves. Tell us a little bit about you and your current role. And we'll start first with Carl.
So, hi everybody, Carl Raven from Visa, and I lead out Issuer Enabler team at Visa. So it's the team that's responsible for the relationships with all of the issuer processors across Europe.
Great. And next we have Jess Cook.
Hi, everyone. I'm Jess Cook. I'm a lead solutions engineer with Marqeta. I've been with Marqeta for about 5 years now. And in my current role, I am responsible for kind of all of the tech, product, regulatory solutioning for our program management customers in the UK and EU. So thank you.
Great. And last but certainly not least, Jess.
Hello, everyone. My name is Jess Shah. I'm a fintech product consultant. Worked in financial services for nearly 17 years now, building products for big financial services organizations and small, scrappy little fintech startups. And I also write a newsletter called Fintech Under the Hood, which is a kind of dive under the hood of all things fintech.
Great. Thank you, guys. Thank you so much for being here today. Let's start off with question number one, which is, what is the definition of card program management? I know when I started working on card program management here at Marqeta a couple years ago, I quickly realized that there really isn't a standard industry definition. So would love to hear what we mean by that term and how you would define card program management. And let's start with Jess.
All right. So kind of in my opinion, card program management is comprehensive oversight of a card program. And the goals are to reduce complexity, provide infrastructure, tools, and expertise to kind of run a great card product. And that can span from regulatory guidance, product guidance, banking, and kind of all of the bells and whistles that go along with building a really great card program.
Great. And then next we'll go to Carl.
Yes, I think you made a good point that there's so many different definitions. Even internally on my side, there's different definitions. So how I would look at it would be it's a single provider that's able to run a program on your behalf and then provide all of the aspects that the card program needs through a one trusted partner.
And Jazz?
I'm gonna go ahead and build on both of those. I see it as, again, I'm going to say in my opinion, it's the end-to-end process of designing, launching, and overseeing a card program, whether that's a debit card, credit card, corporate card, and it's everything from compliance, regulatory discovery, kind of market discovery, all the way to looking at card economics and scaling the program. And that may be one vendor that does the management and provides the services, but it can also be a kind of external person, group, or organization that manages multiple vendors across that life cycle. Yeah, between us, I think we've nailed it.
Yeah.
I think between three, we've nailed it. And I think it just goes to speak to how much complexity really does go into a card program. I feel like often people don't realize until they start digging in, but there's so many pieces, so much to have to pay attention to with regulations and compliance, and that card program manager is really supposed to be the entity or the many entities that help get there. So thank you for those definitions, so helpful. Next is, what are some of the most exciting new use cases you're seeing emerge in card programs today, and why do they stand out to you? Jazz, I know you recently wrote or are writing an ebook on card use cases, so would love to have you tell us more about what you have recently been writing about and looking into.
Sure. I mean, I guess we can start with the obvious things. When people say cards, I think the first thing in the modern day innovation era they think of is digital banks. So debit card or prepaid card that's linked to an underlying account or an underlying FI, and it just enables consumers to make payments in the way that most people have been making payments for the past 2-3 decades maybe, and credit cards kind of falls under that similar sort of category. In terms of new use cases, I think there's a few. I don't want to take the mic away from anyone else, so I'll just cover one. And the one interesting one that I've been seeing is this like a card linked to personal finance management products. It's quite predominant in the US. I think when you look at Dave, for example, Dave had a lot of personal finance management tools, and it was an underlying. It was a digital bank as well, or is it a digital bank? But when you look at things like Bridget, there's Earnin, Clio, who initially launched in the UK, then moved to the US. Those are really interesting cases of organizations who have traditionally not used cards. It's more been budgeting tools, giving you a financial overview. But recently they've moved into the card space, I guess, as a way of, one, generating revenue, but also being a more full stack product for the consumer, having all those tools, having oversight of all your accounts, having an open banking connection to your JP Morgan account, your Bank of America account, your Monzo account, for example, but then just having one card to make the payment instead of 6 or 7.
Yeah, that's a great call out. We've been seeing those as well. And even just from a personal standpoint, those jump out to me as something that's interesting, being in the space and just, a human having bills and all the things. Jess, what about you?
Yeah, so I think I would look at maybe not some new verticals that we're seeing card programs, but some that are kind of seeing a resurgence. So gaming industry, seeing in-app payments for games using virtual cards, starting to see a larger uptick in that. And some of maybe the less sexier areas like shipping and freight and mobility, are seeing a new resurgence in card payments as well. So I think about kind of how we've dealt with those industries in the past and the kind of the new and innovative products that we can start offering those industries who are kind of re-looking to get back into those products and have flexible payment methods.
Yeah, that's a super interesting call out. We recently did some research on my team on just the gap between where consumer payments are and commercial, so more like your tracking, and there is such a gap. And those B2B players, they really want the same experience that they get in their everyday lives with the consumer. And for people who can capitalize on that gap, there is such an opportunity.
Yeah.
So totally agree there. Carl, last but not least.
It's going to be a tough act to follow after all of the answers. So I think what Jay said, that I think digital is now the standard. Everybody, when card program, digital is no longer like an added on feature. It's a standard feature that's core. But I would agree with you on the commercial side. One area that wasn't mentioned was insurance.
Yep.
I think that's and that's probably more from a personal perspective, because from a personal perspective, my daughter has diabetes. We've had a lot of insurance, like payments, etc., to make, and it's always been a really cumbersome process. Whereas the ability to draw up a virtual card that can be spent towards kind of medical payments, etc., might not be a sexy use case, but it is like a valid use case that's used by a lot of people, and I do think that sector is going to grow quickly.
And to your point about insurance, we're seeing a lot of travel insurance use cases too. So being able to pay with the card if you need to access medical services while you're traveling. So I think that I agree that that's going to be a really important vertical and industry coming up in the next few years.
That would be so impactful. Moving on to the next question. How do you see trends like embedded finance and instant payouts shaping the future of card programs?
I can start with this one. So I think embedded finance is going to give a lot of different companies access to payment methods that they didn't traditionally have, especially with card program management. in an embedded finance, the company, their core product isn't payments or cards. So they're going to need a card program manager to come in and run as much of the program for them. But this gives more companies access to new features like rewards programs, and being able to give new incentives to traditional customers that they may not have had access to before.
Absolutely. And also that would create just like customer loyalty and stickiness.
Yeah, exactly.
Yeah. Jazz?
Yeah, I mean, kind of going off the back of Carl's point on insurance, really, I think embedded finance and cards connected to disbursements solves a big problem. I think building the kind of front end part of an embedded finance proposition, and I've done it once before, isn't that difficult. What's difficult is you've built the embedded finance kind of acquisition engine, but you still want to know what your customer's doing with that finance. You still want oversight. You want understanding. You want to track some behavior. If you're giving an SME finance, for example, if you're giving them £10,000 or dollars or whatever, you want to know that the reason that they've signed up for the finance is still what they're using the finance for. And so a card gives you a bit of control. It gives the SME or the consumer, in some cases, the kind of accessibility to use the finance almost instantly. And nowadays you can build embedded finance propositions that are you're buying a load of goods from Lowe's or B&Q, you get an embedded finance option, you can spin up a virtual card, and you can spend that money on the card as and when. You don't have to wait for a card to arrive. And then the card program manager has visibility. They know where you're spending it. They know what you're spending it on. So I think there's embedded finance. I think is the cards element of embedded finance is key, because I think disbursement, that last mile of getting the finance to the SME or the consumer is the difficulty. And I think it's the same, kind of very similar to what Carl touched on. It's the having the embedded bit at the end. It's always the last bit that's very difficult. The first kind of 80% is it's not too difficult to do. The last 20% is difficult, and I think cards kind of solve that challenge.
Carl?
I'd agree with both points. So it enables these non-financial companies to have a card and an extra revenue stream for the first time. I think, like Jazz was saying, it's never been so easy as a cardholder to launch an app or go in an app, spin up a card, start transacting straight away. So I guess to echo the points, we are seeing new companies for the first time offer these services that traditionally we didn't see before. And then actually it's also then causing the traditional players to relook at, okay, actually is my journey the most slickest? Is my cardholder journey the most slickest? How could I improve the card offerings that we offer? So it's kind of creating this whole thing in the industry where it's not just embedded finance, but it's causing more traditional players to have a look at, okay, what can we improve? What can we do on the card sides? How can we drive more stickiness with our cardholders?
Yeah, absolutely agree. And I would add that when tying this back to card program management, for embedded finance players who want to have a card, they can work with a card program manager who knows the ins and outs of how to run a program, really take on the operational complexities, the regulatory complexities, so that the embedded finance customer can focus on what they do best, which is their business. So there really is such great partnership with an embedded finance customer working with the card program manager. And I'd also add, by having these card programs, embedded finance customers can get so much great data on their customers via transactions, which can be used in a lot of different ways. So not only is it a revenue driver to have a card program, but also you get really good insights on your customers, and just another sticky point with loyalties, rewards, all that good stuff. So yeah, it's interesting times. It should be very interesting to see where it all goes in our lifetimes. Next question. Are there any industries or verticals that you think are on the verge of a card program breakthrough moment? I think we've touched on a few, but is there just one that you're like is on the precipice of just totally blowing up?
I'll go. I would say commercial as a whole, because it is underutilized and underserved. But if I pick one, I'd probably say We've seen a lot in fleet and fuel.
Yeah.
And we've seen a lot in that space, and I do think that will blow up in the next kind of 1 to 2 years, how to modernize those fleet and fuel cards and journeys. So I'd probably go with that one. Was the big one.
Very cool.
I mean, I was going to go next, but I think I'm struggling. But when you say breakthrough moment, it's kind of tough to. I think
that's why I've been saying re-emergence instead of breakthrough. Like, I think many industries have looked at putting cards and getting data into place, but kind of some have fallen off and are starting to come back again, like we've mentioned with gaming and insurance. But I think it's hard to pinpoint kind of just one like very new use case that we've been seeing.
Yeah, I mean, corporate credit or like SME credit cards. There aren't a load of them out on the market. There's the one. I mean, Tap on Tap is the one I think of because that's what I've got. But banks themselves don't have great SME credit cards, and I think there's space like you see with Yonder in the consumer credit space. I think there's more scope to innovate there. But I mean, I look at all of the other industries where there's still so much scope. Travel, travel, hospitality. I know I like the gaming creator and gig economy payouts. I think that's probably a big one, especially when you look at places like the Middle East where gaming industry is kind of ridiculous, like 5x year-on-year growth. I think that's one maybe breakout space. But again, I think lots of them have re-emergences rather than breakouts, and maybe that's because there's more understanding on the vendors and what maybe a growing understanding of what card program management is and the reliance on third parties to do the work. Whereas I think when you look at some of the kind of travel, hospitality, card programs, or football clubs, for example, used to do it. I think they did it and then maybe got burnt by the economics of it 5 or 10 years ago, and now they're coming back and going, actually, we don't want a co-branded card. We want to manage our own card program, and with all these new tools, we can do it. 10 years ago, we couldn't, but now maybe it's the right time for them as well.
Super interesting. Next question focuses on, I'd say, is a hype word we've seen recently, but stable coins. It's kind of been in the news. We've been talking about it. So where do you see stable coins and card programs working together? Are they symbiotic? Are they competitive? Like, what is the relationship in the future there?
I'll do a quick one. I think stable coin growth is going to be driven by cards personally, and I think all of the volumes on stable coin will mainly be because of consumer usage of cards, but not really knowing that the underlying rail moving money is a stablecoin rail. And that's why I kind of got more and more interested in stablecoin, because I think it's the challenge with all these new technologies is always, how are you going to change the customer behavior? And I think the customer behavior is so set for the past, again, 10, 20, 30, 40 years of using cards. Tokenization shifted it a little bit, and that was quite a big shift. So now people are used to paying with it, but I still think the card is that mechanism that people are familiar with, and I think abstracting too far away from that will be too big a friction. So I think cards will be the kind of the supercharger accelerator for consumer stablecoin growth.
And just a follow-up question for you, Jess, like what companies do you think are really leading the charge on the rails on the getting the stablecoin using the cards?
There's a few. I think BNK are one. I think we can look at Stripe naturally and what they've just launched. I think that just because of their merchant and acceptance reach, I think they'll be a kind of driver for that on their new venture. But I think all of the new folks issuing stablecoin, but all of like BVNK who have card issuing on their roadmap linked to stablecoin. I think those are probably the two big ones.
Cool. And Jess, you were about to say something.
I was just going to agree kind of about the symbiotic relationship between stablecoin and cards. And I think it's going to stay like that for quite a while. And we're going to see stablecoin as more of compatible products alongside. So looking at stablecoin settlement, using stablecoins kind of for institutional payments or for tougher markets where it's hard to settle in fiat currencies just because of the exchange of money. So I think it's going to kind of help in the background for kind of more common-based payments than be a competitive product.
Yeah, I agree with both of those comments, because I feel like it's in its initial days where we've got some pilots in the market or some first movers, and other companies are waiting to see what happens before whether to adopt and move with it. But this is quite normal with any new product. You always get the handful that, okay, we want to be first, and then you get the slower move, not the slower movers, but the ones who are more cautious with, okay, is it going to work, is it not, how would I adapt it into how we kind of launch cards or run our card programs. But I definitely don't see it as something competitive. I definitely see it more as symbiotic.
Very cool. Okay, the next group of questions are just going to focus on, for card programs currently in existence, scaling and market expansion. So what advice would you give a company looking to scale their card program? Card programs, there is so much complexity. It takes so much work to launch. They obviously want it to be in the successful in the long term. So how would you guide card programs on their path to expansion?
I can start this one if you want. So I would say do your research. Pick the right partners or the right trusted advisors. And understand the dynamics of the market that you want to enter, because that does vary, and especially when you go region by region, it varies even more. So probably, I guess that's linked into the research, but can't stress how, from what I see, that some people believe that, okay, going from Europe into the US, it'll be the same, and it's not. It's completely different. Yeah. So
I would add on to that and kind of just, I guess, plug into the topic of card program management and finding a card program manager in those regions, because they're going to have that regulatory expertise and be able to guide you on the nuances of the region. To Carl's point, if you have a customer going from the US to the EU, there are quite big differences in how interchange is handled. So that might need to be something that you factor in how you bring your card product to market. And then there might be different regulations around how you run KYB or KYC. And that card program manager is going to be the one to help you, guide you, and help you understand the nuances of the region that you're going into.
Yeah, difficult to disagree. Carl, I was going to say discovery, and I think that he went deeper on the discovery bit. But I don't think you can scale a program without really understanding why the program exists in the first place, and going back to the fundamentals of who's the card for, why does it exist, what problem does it solve, and then maybe kind of trying to tie that into the objective of scaling, like why are you trying to scale the program? It could just be revenue, but if it is revenue, you need to understand that if it's a new market, is the base there, are they card users, what type of card usage is it? Because it's not the UK versus US market, even those two markets are different. People just think it's one big homogenous market, but it's not. Credit card usage is different in the US than it is here. And then when you go to somewhere like the Middle East or other places in Europe, usage is different, card types are different. So I think, go back to Carl and Jess's point, discovery is crucial, and then tying it back to the objective, like why are you trying to scale? If it's revenue, go back to your discovery and figure out, is the market big enough? Are there enough card users? What type of card should we go with? All of that kind of goes back to the discovery point.
As a follow-up to that question, in your experience, how should or how can a program manager help you with this discovery or research phase?
Going back to what I said in my answer before, it's having that expertise. So usually your program manager is going to have regulatory expertise and product expertise specific to the region that you're going into, and that can extend to network expertise as well. So relying on them to walk you through that while you understand kind of the backbone of your program, as John just mentioned, letting the program manager take care of that so you can focus on what you're trying to build. I think that's how card program managers help you there.
Yeah, it sounds like not only build, but launch confidently. I'm sure any
Yeah,
you're like, is this going to work? Yeah. What common pitfalls should companies avoid when trying to take a program from a single market to a global footprint? Do you guys have any war stories or more optimistically success stories that you can share?
So don't believe that it can happen. It's probably, I see this one quite a lot. It's where you see unrealistic kind of expectations on how long it would take to launch.
Mm-hmm.
You probably have a lot of stories, but we've only got half an hour left, so time. But there's I don't really want to describe one program, but yeah, there's lots of success stories out there, and there's lots of public success stories. But I think just avoiding it goes back to the discovery. It's just being clear of how it's going to work and working with the right partner, and working with that trusted advisor. Can't stress that enough.
I think for me, it's the like a pitfall is the mentality of this is the way that we've always done things. So this is how I want to do it in this market, when you might have to go in with a more flexible mindset because the market is different. You may have different requirements. You may have different products that you need to put in place to satisfy regulations. From a technical perspective, yes, you might be able to do a copy and paste, but there's going to be different requirements, and coming in and saying, well, this is, say, what my other program manager required me to do, or what I have to do in the US versus Canada. You have to come in with a little bit more of an open mindset and that discovery mindset to understand how that market actually operates.
Yeah. It felt like Carl had some tea to spill there, but he.
I feel like we can spend more than half an hour talking more stories and success stories.
Yeah. Yeah, no, exactly. I think my just adding to the great points you guys have made, it's probably just making sure that you've proven yourself in your existing market. And I think people assume that we've cracked this market. It's like, well, there's still a lot of, for example, if you're in the UK and you're trying to launch the US, well, there's still a lot of growth in the UK. So you should grow more in the UK before you make the jump to the US, and make sure you've got some of those metrics. What are the benchmarks? What are those key milestones we're going to hit before we go somewhere else? And then kind of keep spinning the UK plate and maybe go somewhere else that's adjacent, which again I guess would be the US, but it could be somewhere else in Europe. So I guess, prove yourself in your own market before you go, oh, well, US market is 10 times bigger, so why don't we go there because the market's bigger? Well, prove yourself in your home ground first before you go away.
Yeah, walk before you can run.
Yeah, exactly. Yeah, exactly.
All really good pieces of advice, and it's not Halloween yet, so thank you for sparing us the really scary stories. So when we look at card programs, obviously regulations is a very front and center topic that requires a lot of attention and focus. How do you see regulatory complexity influencing how card programs are built and then expanded?
Go ahead, Carl.
I was going to say, regulation does play a huge part. And we look in Europe, and it varies even in Europe. But then as soon as you go outside Europe, let's say CEMEA or AP, and then it varies country by country. on-soil requirements or data requirements. So you have different AML or KYC requirements. So it does vary significantly, and that's where the card program manager, the advisor, will be able to help you with their experience of those markets that you're looking to go into.
I think speaking from a product perspective, like one of the big differences that you still see today coming from, say, the US, the EU, is kind of the SCA 3DS regulation. So having that advisor to advise you on putting a product into place. If you're coming from the US, you might not know what that means. You might not know what options you have to be able to exempt transactions. So even from a product perspective, the regulations kind of impact how you build a card program.
Very good point.
Nothing to add.
Nothing to add, John?
No, again, you nailed it. I just think having someone else be the expert on a really specific space, I don't think you can. Again, if you're an SME finance provider in the UK or in the US, you can't be an expert on all the financial regulations in all different markets. And I don't think you can be expected to. You should be really good at what you do. And if you want to add a card to your stack to help your existing consumers, you shouldn't have to, spend 12 months and become a regulatory expert to do it. And it doesn't really make sense to do it anyway, the time investment. So outsource the work to someone else. I mean, that's the model we've seen over the past 10 years, and it's worked. It means that you can get to market faster. You can launch a card program faster, which means you could prove whether it works in the market faster or not, and burn less revenue in the process.
Yeah, really good point. Relying on people who have the experience and knowledge to really stay ahead of it too, because I think it is, regulations is constantly changing, and being able to stay ahead of those, I think, is super important as well. Up next, we're going to focus on user experience. So, of course, with a card program, the front end, how your cardholders are interacting, is super important to the success of a program. So when launching a new card program, tell me about design and how important design is in driving onboarding, adoption, and then loyalty. And how do you get this right?
I mean, I can speak from a couple of different experiences. And this maybe touches on your point about maybe getting it wrong sometimes. But the examples of when I've seen it been done right and where I've seen successes in my own work is going back to discovery, where the discovery's been done right. You know who you're building for. You build a persona for who the target customer is. You figure out what they do, where they shop, what kind of other apps they have, and really define what the product is. That's when you can move to, I don't want to say the design phase, because I don't think we really do phases now in this new agile way of building products. But you have to know your core requirements before you go out and start designing screens, because you need to know who you're building for. An SME consumer digital bank for a 19-year-old in the UK market is very different to an SME digital banking proposition for a 50-year-old in Saudi. They're very different propositions. Their expectations are different. What they're used to is very different. And you have to know all of these things before you go to design. I think the default has always been, or the default recently has been, copy Monzo. It's a formula that does work most of the time. But if you copy Monzo and paste it into a market where they've got nothing like Monzo, that could be a shock. But it works if the ICP still fits, the complexity of the product and the innovation features fit. But just putting a Monzo UI on a Lloyd's Bank circa 1980 backend doesn't work, because it doesn't have the same feel, and it's probably not for the same market. So I think nailing that again goes back to nailing the requirements, nailing the understanding, knowing your ideal customer profile, and knowing the market again. And that's where you can really design that awesome user-centric sticky product.
And I think once you get into that design process, understanding the key points of what a frictionless user experience actually looks like. So what are the tools that you can use that are going to make it easier for your customers to onboard without running into issues or glitches or having to redo entries in their KYC process? What are some of that kind of newer technologies that can prove identity? So using those tools to make the user experience easier. Anything that makes it easier is going to be kind of what you want to head towards when you're designing that flow.
Yeah, I would add to that that you do need to understand the demographic of the cardholder. I mean, even when you look in Europe, the demographic across Europe is quite split evenly across age groups. But then when you go country by country, it's completely different. The younger generation, it's all about the easiest cardholder journey. There was a piece of research that said how many screens or was the optimum. I can't remember how many it was, but it's if you have too many, people will throw it away because it's so much easier these days just to find an alternative. But I'd also say, as much as we're talking about the UX, it's just as vital that it actually works, because if new user using an app for the first time when the journey is great but actually technically doesn't work, I think it's like 1 in 3 people won't use that again. So you need to be sure that it actually works as well as the journey being smooth. And sometimes that can be, I don't know, people can overlook that and it can be a bit glitchy or whatever. And that's where the right partner who has that experience and has done that is going to take that heavy, not burden, but is going to do that for you, that and make that smooth journey, and rely on your UX and how you want to build that piece out.
I think that's a great point, especially for an embedded finance. You're doing a card program as a customer for the first time. You have to have that trust, and that's built at every tap. So it has to work, it has to be seamless. Like, this is your money now. I think that is super important to call out. So the next question, I'm going to kick it off with Jess. So your company, you decided to do a card program, and you all of a sudden say, wow, I got to build out the front end. I have to track developer resources. I don't know how long this is going to take. I got to make sure it includes all the payments, important things. I know that Marqeta launched the UX Toolkit last year. Can you tell us how this UX Toolkit really helps customers with this step of creating and then launching the front end of a card program?
Yeah. So, regardless of what the offering is, customers are always going to kind of want to put their branding, their bespoke flow into what they want their UI to look like. What the UX Toolkit does is it adds specific components into your UI for you so that you don't have to spend development resources to put them in, and you can really focus on the branding aspects of it. So if you want, say, an account management component, you have that easily embeddable into your app directly from Marqeta. Or if you want to, have your user level information editable. If you want to, the biggest thing I think about with the UX Toolkit is kind of the help with PCI. So for companies that aren't PCI compliant or PCI certified, it allows you to be able to show card information, show kind of PII without needing to kind of worry about having that certification, and letting Marqeta take the burden off of you for getting that information. What's really cool about the UX Toolkit is you can kind of go in there and build your branding right from the demo site within the website. So I really love that functionality. And you can kind of see what the branding looks like. You can change the colors. It's really there to help ease the developer burden and match your branding as well.
Awesome. And Josh, I know you've looked at the UX Toolkit as well. Would love to hear your thoughts on it.
Yeah, I mean, I think people underestimate how complicated it is to build even an onboarding journey. I've done it three times end to end. So from onboarding to payment to balance updates and transaction refreshes and applying for things in app. And I think there's there is a standard for how you do onboarding well, and there's no point in because of the regulations and because of the fact that you have to capture some information to build out nurture journeys, you have to do KYC. There is a template and there is a standard, and it's like, well, building that from scratch doesn't make a lot of sense unless you're doing something completely far out. But even validating an email address, there's like 30 different ways of validate, like having the input box where you type an email address in. There's different text you could have underneath. There's different input formatting, ghost text underneath it, the way that the input box processes the email or kind of does the assessment as you're typing as to whether something's valid or not. There's 30 different permutations, and you might spend a week looking at that one box when you could just build an MVP, build a kind of wireframe within a day, and then tweak those things around the edges rather than start from a blank piece of paper and go design me an onboarding journey. You could go, okay, let me just drag and drop some of these components, piece them together, and it can tweak rather than build from scratch. I feel like it's very well timed with people's usage of AI as well. Nowadays, people aren't with AI. They're not going, oh, I'm going to write a template of a book, an outline from scratch. They're going, write me an outline. Here's kind of what I want it to be, and here's the theme, and here's the demographic, and here's the topic. Now write me an outline. Then you might go write the book yourself, but writing the outline still is administrative burden, and you might want someone else to do it. Just it speeds up your time to market, and maybe if you're writing a book, it speeds up your time to get that book published. I'm not writing a book, by the way. That's just the analogy I went to.
Carl, anything to add on UX Toolkit?
I would say it just goes back to that. Like historically, they were very clear. Like some companies do transaction processing, others would offer this, others would offer this. Now it's all around being able to provide as much as you can for the card programs and the companies that you're working with. So all of this is just in the benefit of the companies that you're working with and giving them the tools to launch a successful card program. And again, it goes back to the point that it allows them to spend the time on the things that they're good at, and you're providing them with tools of the things that maybe they're not so familiar with.
Yeah. I just want to call out the comment in the chat that focused on being able to launch a strategic pilot. That is a plug for the UX Toolkit. All these components are designed by payment experts, and within the SDK, you can build and customize and test what it looks like, which is a huge advantage. Okay, moving on to program migrations. So you're working with the card program manager. It's just not working out. You're not happy. Things are breaking. It's not good. You want to move to another issuer processor via migration. That can be a painful and complex process. Would love to hear, what are the most common challenges you see in migration projects?
I can start this one because I used to have a full set of hair before migration. So the common thing that I see actually is the decision whether to do a live card migration versus a recard. Quite simple, but that is a really big, like that's going to drive your whole project plan and activities and stuff that needs to happen. So that you often spend a lot of time on that and don't make a decision and maybe that's because you don't understand, and that's where the new partner that you're migrating to is going to help you with, okay, this is the best option and this is how it will work. And I'd say just having that clear project plan between all parties and outlining what needs to happen and who's responsible and things that you can follow. And then there's clear accountability across all of the parties. Because there are a lot of parties in the migration, because you have the existing process, the new one, you have the card program itself, you have a card manufacturer, you have a whole bunch of partners.
Jess, I'd love to hear how Marqeta approaches migrations and how they really focus on how do you reduce risk, how do you make it easier, with all these parties that are involved. How do they make a migration successful?
Yeah. So I think the first thing that I'll say is that different providers can have different definitions for what migration is. So first thing you want to do is kind of when a provider is talking about migration, what are they actually talking about? So to Carl's point, like, is it just a recard that they're helping you with? Is there some backbook migration? One of the things that I love about Marqeta's strategy is that we can support no matter what the decision is around what's best for you and what your risk appetite is around moving your cards. So if you just want it to be a backbook, you run down your current program and start from scratch. That option is available. If you want to do phased recarding on a new program, either proactively or on expiry of cards, that's an option. We also now have the ability to do a full migration. And what I mean by that is the ability to migrate not only cards, but user and transaction data too. So that's a huge benefit for card programs who have all of this data already and maybe have been running a program for a really long time and don't want to lose it just because they're moving processors. So that is a huge asset to a lot of our customers who are looking to save the data but switch to a new processor.
Yeah, I think it's interesting for a card program where they don't like their current relationship, but they really don't want to impact their cardholders. And I read somewhere like the best migrations are the ones that are invisible to the cardholders. The only thing they notice is like all of a sudden better features or better product or better experience. And that's
Exactly.
the North Star.
Yeah.
For the rest of the panel, would love to hear in your experience, like what are the number one reasons or the top reasons that card programs usually want to make a switch? Like what is breaking or what is not working?
That might be you, Jess.
Yeah.
I was going to say, Cole ran away. I was going to say, I've still got some of my hair. So as you can tell, I haven't been through any of these migrations, fortunately. I mean, I'm going to guess one of the big reasons is the revenue exchange, is the financials. And then probably the second, this isn't based on migration, this is based on working with different card program managers with their respective tools, is the kind of back-end tooling that you get.
Mm-hmm.
So obviously with different processors, you get different level of insights, card insights, but also just like who's using the card, when are they using it, and different capabilities. So I think those are probably the two that I've seen, but not from a migration point of view, more from just doing the due diligence in the initial phase and doing the comparison between the two. Those are the two things I've seen that are different.
Yeah, some things we've seen is product innovation not being there with current issuer processor, not being able to expand to global markets, or just things kind of breaking are the reasons we've seen as well.
I would add scale as well. So the program is growing and the current processor doesn't have the ability to expand or scale along with the customer. So they need somebody who can provide better uptime, more capacity for transactions.
Very good point.
Yeah, sorry, another one to add, just because of what you just said, Jess, is the scale in region as well. I think sometimes people don't want to have kind of multi-processor model. So if you're in the UK going to the US and you're using a provider that's not really familiar with the US market, you might want to do a switch first, then go to the US with a provider that operates in a wider breadth of those markets.
Yeah. Up next, we're going to focus on risk and security. So risk management is obviously critical for a card program success. What do new program managers often overlook or underestimate in this area?
I can start with that one. I think that they can tend to underestimate human error. And if you're looking at the consumer market, the consumer's ability to just do things that they're not supposed to. So that is key in kind of understanding the level of security that you want to have on your card program. And then there are different types of fraud for different use cases. And there might not be a one size fits all for how you approach specific issues of risk within specific either industries or product offerings. Yeah, I think that's where I would start.
Yeah, I mean, I think the ones that I've experienced are starting a program and just having the gates fully open and just being like, anyone can onboard, anyone can do KYC, anyone can use the card. And I think, again, back to Jess's point, when you have such a broad demographic of users, you can't pinpoint kind of where potential risk points are in the program, because your user base is so broad, where they're spending is so broad, and I guess the pace of transactions can be, hitting you thick and fast. It's very difficult to kind of put your hands around it and assess what, where the risks are. So I usually recommend focus on a specific demographic, let users on board, like create the controls in the product, create a wait list, and then give people access to the card and issue cards slowly. Don't just issue cards to whoever onboards. And then you have a control of flow. You can make tweaks to risk models if you need to. You make tweaks on onboarding KYC, and then open up the floodgates.
Yeah, absolutely. I think for card programs, it's a fine line between, having everyone access it, having that good user experience, and also keeping the program protected. And that's where I think a program manager can help, just balancing all those things out. We do have a question on migrations in the chat that I quickly want to address. For a full migration, does your program need to be on a dedicated bin, or is it possible with a shared bin?
Historically speaking, dedicated has been the way that we get that full migration done. With a shared bin, obviously there's a higher risk with the additional customer data that sits on those bins. So we would probably look for it to be dedicated. Yeah.
Cool. Thank you. Last question. This hour has absolutely flown by, but this is always one of my favorites. So crystal ball, future outlook. If you had to pick one innovation in card program management that will define the next 5 years, what would it be and why?
I can kick us off. I'm going to say AI. I think a lot of what the news has been around for AI has been with products like agentic AI and, what the consumer experience looks like. But AI is also going to help how card program managers become more efficient, how we reduce timelines for onboarding, how we develop our tools. So building AI into fraud tooling and disputes tooling. How can we use that to become more efficient, get customers data quicker? I think is going to be huge for card program managers in the next 5 years.
This is tough because I was going to say AI as well.
We all know the answer is AI.
No, I'd probably echo Jess's point. It has to be AI. I mean, it's hard to go into any kind of panel or discussion or anywhere and not talk about AI, and how are you going to incorporate that. But so yeah, I'd have to echo that point, which I know is a boring answer, but I just can't think of another one.
I'm trying not to say AI. Artificial intelligence, does that count? Technically, I didn't say AI. Apart from AI, in terms of card program management, I think the things that Visa, and this is not a plug for Visa, Carl, that we didn't speak beforehand, but the kind of innovations that came out last year, things like flexible credential, I think that will start. Flexible credential with AI, with stablecoin and programmable payments, programmable money, I think will, and also this unbundling of financial services where everyone has 3 different accounts, maybe 5, including 2 credit cards. I think this like one card to rule them all model, I think will start to become more prevalent. I know Curve is, I guess, a kind of example of that, but I feel like now that the technology is really converging to a point where it makes a lot more sense to have one card where you make the payment, but the payment can move into whichever account is best based on rules that you set. And that will also drive, I think, some of the back-end tools that program managers have to build, definitely more complex tools, but tools that enable consumers and fintechs and financial services to actually build rules into a product that can route payments to specific cards at specific times, depending on the merchant, depending on the time of the month, depending on when payroll comes in, depending on interest rates, and which cards give the best rewards or best interest rates or lowest interest rates depending on credit. So I think that kind of tries to encompass all of the answers you've already given. So AI plus stablecoin plus flexible credentials. I think that's one of the big innovations I see over the next 5 years.
Well, thank you guys so much. There's no denying that we're at such an interesting phase in this industry, and there's so much to look forward to. And thank you guys for your insights on card program management. And I hope this really helped the audience understand, the difference of having a card program manager versus building yourself when you're having a card program. So thank you guys so much. And thank you to the audience. And hopefully we'll talk again soon.
Awesome. Thank you.
Right. Thank you.